I do think like your 13.8 makes a lot of sense. I've been isolating down 12, 13 and change as like at least an area for a major bounce, maybe back to like 17, 17.5, maybe 20. So I again, percentage wise, that's a big bounce, but I still, yeah, it'd be interesting to see, is that the low? And one thing I should tell people is like just because I see it at 9,000 doesn't mean I'm going to sit on my hands and not buy any Bitcoin down to 9,000. To be clear, I've already started my hodl position, right? So I basically know, and this is from being a pro trader, and Tom can vouch for this too, is like, you never know where the bottom is. You never know where the top is. The best thing you can do is like do what I call shotgunning, where you shotgun it. When we were at 65, 69,000, it was all about, oh, I got to go long. I got to jump on this train, right? And now what you're seeing is as we're down in this 16,000 range, and my downside target is now about 9,000. A lot of people are like, well, do we go short, right? Do we go short now down there? And what I say to them is, if you took the chart of Bitcoin and you flipped it around, it's basically like you'd be buying at 60,000 now. I mean, essentially, right? 16,000 to 9,000. So you have to say, was that a smart move to buy at 60,000 or 65,000? The answer was no. Well, then the same thing. To me, yes, I still think it's going to go a little bit lower, but you're so close to the bottom, in my opinion, now.
It's been a while since these levels of fear dominated the crypto markets. That's mainly because of what's been happening with more prominent names like FTX, Celsius, Voyager, and other bad actors falling apart. If you still want to take profits from one that many consider the opportunity of a lifetime, you need to be better at making the right decisions at the right time. Not only that, but also be better at doing Bitcoin price analysis and predictions. Today, the chief market strategist from InTheMoneyStocks.com and VerifiedInvestingCrypto.com, Gareth Soloway, will give his new Bitcoin price prediction and share what type of positions you should open or close to make the most out of all that's happening. Please pay close attention, as he will show you the following targets and what you should be doing to prevent you from being wiped out like many other investors.
I mean, you look at what happened with FTX. I mean, a while ago it was Terra Luna, Celsius, Voyager. I mean, go on and on, but I mean, there's just black swans everywhere popping up. It's almost becoming a common thing, unfortunately, in the crypto markets. But let's hope that, and this is what I'm seeing now, is I think that this breakdown is the beginning of the end, meaning the beginning of the end of the bear market. Where I think that, yes, we're going to go lower, but wherever we bottom here, that's going to be finally the bottom. And usually that in markets, whether it's the stock market, that final panic, the one where, you saw big money losing on FTX, you saw small money getting crushed there, that's usually the end where people finally give up. And that's what we're getting to at this point, at least starting to see. I've always been a purist in terms of like, I haven't been scared of regulation, right? So my accounts are at Coinbase, Kraken. I think Kraken does like 2 audits a year.
Yeah, I love Kraken.
Coinbase is publicly traded as a stock, so I think there's some SEC oversight. So it makes me feel a little bit better. But one of the things I always say is that, if you have, it doesn't matter if you have 5,000, 10,000, or 100,000 or $1 million, it's smart to kind of take portions of that and spread it around different exchanges. Because if one goes belly up, at least you're only losing 10% or 20%, not 100%. And it's just basically risk management. I mean, it's crazy in this day and age that you have to decide, it's not a matter of does Bitcoin go up or down or crypto go up or down. It's, does my exchange basically take my money and run? I mean, that shouldn't be the way it is, but it's crazy with FTX. It really is. I mean, I think this likens back to Enron for me, to WorldCom. Some in the early 2000s, there were stocks that did some shady things and they went bust. And it's kind of a growing pain for an industry. I think it's something that we have to get through. It's going to force regulation on the industry, which I know everyone hates, but at this stage, I think we all have to admit we need some sort of clarity, some sort of rules, so that investors feel safe. I mean, really, as an investor, your only concern should be, is my crypto going to go up or down? Not am I going to wake up tomorrow morning and my money's vanished, right? And that's where we have to get to. When they say when the tide goes out, that's when you see who's naked and who's wearing a bathing suit, right? And I mean, when Bitcoin and crypto is collapsing, it's going to show the bad actors. Anyone who took over leveraged risk is going to get kind of hung out to dry. And one of the things you always remember, and I learned this from stocks, is like, if you're in a stock that promises too much, and a lot of these crypto exchanges, they're like, oh, we'll pay you, you invest in this coin and you're going to get 20% or 50%. There has to be a point where when the merry-go-round stops, you have to get out of those scenarios because it's too good to be true. And I think that's what we're seeing now is a lot of these players were just promising too much.
So, knowing what's happening right now and knowing that Bitcoin is still collapsing at this point, what should we do next? Is it a good idea to start chasing the drop and start selling? Let's hear what Gareth Soloway has to say.
When we were at 65, 69,000, it was all about, oh, I got to go long. I got to jump on this train, right? And now what you're seeing is as we're down in this 16,000 range, and my downside target is now about 9,000. A lot of people are like, well, do we go short, right? Do we go short now down there? And what I say to them is if you took the chart of Bitcoin and you flipped it around, it's basically like you'd be buying at 60,000 now. I mean, essentially, right? 16,000 to 9,000. So you have to say, was that a smart move to buy at 60,000 or 65,000? The answer was no. Well, then the same thing. To me, yes, I still think it's going to go a little bit lower, but you're so close to the bottom, in my opinion now, it just doesn't make sense to short it. If anything, I'm starting to kind of slowly, like every 2,000-3,000 down from here, I'm starting to accumulate Bitcoin.
But how did he come up with a 9,000 price target? How did Gareth make that Bitcoin price prediction?
That the FTX collapse is very, very, very similar to when Lehman Brothers failed in the financial crisis, right? Okay. We were already down significantly in the stock market, and then we saw Lehman Brothers fail, and it was kind of like that big blow up in the industry. In this case, it's an exchange, but you could argue that the exchange is the banking side of crypto. So it makes sense that it's very similar. You saw big money get hammered when Lehman Brothers collapsed. You're seeing big investors, big money get hammered in this scenario. The third biggest exchange it was, and Lehman was one of the biggest banks at the time. So the same sort of things are occurring. And what I did was I went back on the S&P 500 and I said, okay, from when Lehman Brothers collapsed, and we're going to go back to 2008 here and take a look. All right, so here it is. Here's Lehman Brothers. And it basically was the last final collapse before the markets bottomed. And so I said, okay, what was the time frame? And if you look here, it was on September 15th that Lehman collapsed, and the markets bottomed March 9th. So that was approximately 5 to 6 months. So in my mind, now I have a kind of a potential game plan for that to bottom out. Now, interestingly enough, the markets bottomed out on the S&P in 2009 because the Fed started printing money, right? Well, you could say, well, what would be the equivalent of that in the crypto markets? Well, the Fed's not going to print money. We know that. Not until inflation is under wraps. It's certainly not going to happen by early next year. But I do believe that the equivalent for crypto would be getting transparency and regulation. Kevin O'Leary was saying this the other day in his interview. He's like, I'm going to go to Washington right now and demand for regulation because he got burned.
Yeah, he did.
Yeah. And so to me, I'm like, okay, well, the way crypto goes up is if you draw a lot of money in. The only way that's happening without the Fed printing is with regulation, which creates transparency. And so the idea is within 5 to 6 months, I do believe that the government will have a framework, that Gary Gensler will have a framework for this. And I think then money will start to flood back in on crypto. Now, in terms of my target for 9,000, what I did was I said, okay, if we look at the crypto market, right? This is where this is the S&P. So this was the high on the S&P at around 1,600. When this occurred, we were around 1,200. And then how much further did we drop? We dropped to about 600 and change. So to me, it gives me a framework saying, okay, 40 to 50% downside from here. That puts us at around 9,000. I also think that the 10,000 break is going to be a back-breaking event for a lot of individual investors, which is usually how bottoms are formed. And generally people will be triggered emotionally to dump at that point, which oftentimes marks the bottom. So that's where I'm coming up with it. The last thing I want to share with you guys is, everything comes back to charts with me. And interestingly enough,
we love it.
Yeah. Interestingly enough, if we take this trend line, let me put a trend line on here. If we go to the pre-lows before the 2017 highs, and we put a line there, connect it to through the collapse lows of 2018 and 19, it coordinates perfectly with the 2020 COVID low. And guess what price that is? Right now, it's about 8,600. But in a few months, in let's say 4 or 5 months, it's probably around 9,000. Because it's an upsloping trend line. So then you have a trend line, which would be basically taking crypto back to this longer term trend line that would also match up with that cycle with that correction. So for me, again, listen, just like I could be so far off, it's not even funny.
Now pay attention. What is Gareth's strategy when the bear market is still strong? If we shouldn't chase the shorts, what should we do instead?
I do think like your 13.8 makes a lot of sense. I've been isolating down 12, 13 and change as like at least an area for a major bounce, maybe back to like 17, 17.5, maybe 20. So I again, percentage wise, that's a big bounce, but I still, it'd be interesting to see, is that the low? And one thing I should tell people is like just because I see it at 9,000 doesn't mean I'm going to sit on my hands and not buy any Bitcoin down to 9,000. To be clear, I've already started my HODL position, right? So I basically know, and this is from being a pro trader, and Tom can vouch for this too, is like, you never know where the bottom is, you never know where the top is. The best thing you can do is like do what I call shotgunning, where you shotgun it, meaning you spread out your buys in the general vicinity. And this way you get some exposure. If it doesn't go to your low, at least you have some exposure. So for me, I basically took X amount of money and I divided into 6, 1, 2, 3, 4, 5, 6. And I bought my first 1/6 of that. So one portion of that money, I'm already in Bitcoin as a HODL position. And basically when it gets below 15, I'll do another one. If it gets down to maybe 13 or 12, I'll do another one. At 10, I'll do another one. And the idea is if it doesn't get to 9, which is my target, that's okay, because I've got lots of exposure by the time it gets down there. If it goes to 7, I buy a little bit more, and then my dollar cost average is low enough. So I just want to be clear is that, even pros, you can't be like, I'm only going to buy at this level. If the thesis for Bitcoin is still strong, then you kind of start to say, okay, it's low enough now. I mean, now you're at 16, where, it could go to 9, and that's a big percentage drop from 16. But in the scheme of 69 to 16 or 9, it's not that much anymore. I think it's generally where I'm comfortable with. I don't think there's anything significant about it. Like I wouldn't do a half position because that doesn't give me, like, I guess to put it in phrases, when I get in positions, sometimes I find that like my first level doesn't work, my second one, my third one, and by 5 or 6, it's pretty darn lucky, pretty good odds that I'm going to get that technical bounce. So I guess that's it. But I mean, whether it's a 5th or a 6th position, that's kind of the zone that I'm in. It gives me enough ammo on the sidelines where if it does get, if it gets really, let's say there's a next situation with someone else like Binance, and I don't think there will be, but
I don't think there will be, but
but if there was, then I'd have enough ammo to, on that flush to kind of add to the position. I do equal orders because my biggest fear is if I did a really tiny amount at the first entry and then it doesn't go any lower, I'm like, well, I'm in so little bit and now it doesn't even matter. So I just try to keep it consistent. But I do know some people that, they'll do the smallest order at the beginning, and then as it goes lower, they'll do bigger and bigger and bigger. And I think that's a fine way to do it as long as you stay consistent, right? You don't want to, change the methodology of what you're doing, because that's where, when we start to change what we do and we try to second guess ourselves, that's where we always screw up.
And this is the #1 recommendation Gareth Soloway always makes to new traders, which in our opinion here at the Daily Crypto, everyone should be following if you want to be a better trader or investor in the crypto markets.
A lot of people are like, oh, it's a scam. It was the institutions. It was the big money trying. And then the reality is take millions of people, and then their emotions and their emotional swings are what do this, right? I mean, it's like a mass emotional kind of bubble that everyone's living in, and that's how it works. And you're right. You have to get to that point. The pros are like robots. They are unfazed by everything. They just kind of do what they're going to do no matter what. And as soon as we let emotion creep in, that's where we get screwed, frankly. I think the biggest thing too is like, if you ever want to, for those people watching, like you want to become a pro trader, you want to become someone who's a robot, it doesn't just like start where you go to your computers and you're like, okay, I'm going to be a robot. You actually have to employ some of these discipline techniques at home, like in your everyday life. And what you'll notice is it starts to carry over. Just like any type of becoming an expert in anything takes more than just like showing up at a job and becoming an expert. You got to work on it through the whole thing. And I think that's what people don't understand too, is that, are you someone who sleeps all day and you're like, oh, I'll do it later? Or are you like, okay, I'm going to make a plan and I'm going to follow through with this plan, do my dishes, do my laundry, do this, so it starts at home for sure.
As always, we hope this video was valuable for you, either the Bitcoin price prediction made by Gareth or the insights and strategies. If you want more videos like this, let us know in the comments below, and please leave a like and subscribe. Thank you so much for watching. Next, check out our other videos from Gareth on the channel. This week was full of impactful content. Thanks.